welcome to the course. In this video, we're gonna be discussing about volume. All right. This is module 5 of the course, and let's dive right into it. Okay. So this is one of the Wyckoff's core principle because volume tells the truth. Okay. And this is the third confirmation layer that after price structure and phase context, we actually go to volume to, like confirm our whole analysis that we did. All right. So let's continue. So in the module 1, I taught you guys very basics of volume, where you learned how volume confirms price action. High volume means conviction and low volume means caution. Okay. Now in this module, we're going to be mastering it. Okay. Because volume is how composite operator leaves footprints. Okay. So you might be asking, like, why volume is truth, and because price can lie. The composite operator can paint tape and create false moves and trap traders, and we see this day in day out. Like every day this happens. All right. Even if you go to 1 second, you will see this. All right. But volume cannot hide. you know uh, Volume cannot lie, because every share bought or sold leaves a trace. All right. Because volume reveals true intent. All right. Like they can't lie to you that, like, they bought 500 shares, but, like, they're gonna show only 250. I mean, if it's not in the transaction, it's not gonna show there, right? So that's why volume is the truth in the market. All right. And Richard Wyckoff said it very famously. The tape tells its story. Back in the day, the chart or candlestick chart used to be called, like, tape. All right. The tape tells its story, but you must learn to read it. And that's what I'm teaching you guys in this course. All right. So when we how we interpret volume with Wyckoff's three law is, first of all, law of supply and demand, where volume shows the intensity of buying and selling pressure. All right. You can see here in the chart, uh, as I have told you guys before, you know, uh, you can see this very high volume. All right. And it's corresponding color, the volume representation of, like, how intense the volume is. And that's what this is telling you, the law of supply and demand. When you combine it with volume, you know it the chart comes to life, guys. You can see that, this is very high volume. Demand was overcoming supply, here as well. Okay. Here you can see that too, right? Now, so in law of supply and demand, volume actually shows the intensity of buying and selling pressure. All right. You can see that. And you know what? Let me actually just remove the color of this candle. I want to show you guys. All right. Let me move borders. Okay. All right. So you can see this very high demand candle, right? Volume comes down, right? And then, like, this goes down. Okay. Supply is being absorbed, you see? And then here demand picks up and the volume goes up, right? So this is the law of supply and demand. When we combine it with volume, the composite operator shows its true intent via volume. All right. The second law is the cause and effect, where volume reveals if the cause is accumulation or distribution, you know. And the third law, which is the law of effort and result, here volume is the effort and must match price movement, which is the result, you know. So we're gonna go more deep into all this stuff, you know, and analyze uh, this in the chart. All right, interpret in the chart basically, so that after, you know, after this code, after this module, volume will speak truth to you, you know. uh, so the three volume footprints that actually gets lived by the institutional operator is, first of all, volume at spring, okay, or upthrust after distribution. This is one of the most important event in the market, okay. And the low volume on this sort of event is valid, okay, and the high volume is invalid. And let me actually show it to you guys what I mean by that. So here, um, here, check this out. Right, there's a lot of upthrust. You know, market is just like going up, coming down, going up, coming down, like that, right? And you can see the volume there, it's very less. I mean, here you can say volume is very high. That's why, like, you know, market actually tested that, and, you know, it actually got into, if you had entered short there, put your stop loss there, stop loss would have get hit, you know. But the intelligent investor would actually put their stop loss around here, you know. My point being is that whenever we see low volume on the upthrust or spring, you know, this is upthrust, so you can see volume is high, you know. So this is, I mean, you can take this trade, but it's not a valid one, okay. Here volume is less, so you can take that. Here volume is even less, I mean, like less than that, you can take this as well. So this is how you can this is how institutional operator leaves their footprint, you know. Very high volume, upthrust after distribution then happens, you know, because they actually distributed around this very high volume, right? And those are the events that where the institutional operator leaves their footprint. Okay, second one, volume on sign of strength and sign of weakness, okay. You can see um, around here, when we actually break out of the resistance, or, you know, for going to the upside, when we have sign of strength, all right, very high volume, then it's a good one, okay. And after that, what happens, like markets usually go to LPS, or, like, you know, backing up action kind of sort of event, you know. um, so here what is telling us is that the volume on sign of strength and sign of weakness is the second most important, and high volume on the sign of strength is valid one, and low volume is weak one, okay. So here we can see very high volume, okay, so this is valid sign of strength, okay. And then pull back to the high, or, you know, this midpoint on low volume is what we want to use it to enter trade, you know. And let me actually add the wave volume here, okay, to show you guys what's going on. All right, okay, let me actually remove this volume, you know, it's not making much sense now. Let's just totally remove that, or, you know what, let's just keep it. I think you guys will understand much better when I have all those you know, both of them there. All right, so you can see if this was your sign of strength, you know, then all this volume you can see very small. Like here it was very high volume, so we wouldn't be taking this trade, but here you can see volume is less than that, and it made new low, boom, market goes up. You can also argue, like, why didn't we take trade here? I mean, you can definitely take it, but your stop loss would get hit, you know. And like, there wasn't any strong upside move around there because it was on this resistance. Okay, support was becoming resistance. All right. um, so the third footprint that institutional operator leave is the overall range volume. you know this is where your pattern recognition skills comes in, and in accumulation you will see declining volume, and in distribution you will see elevated volume. What it means by that is, let me find some accumulation. See here. um, you can notice that the volume on this accumulation was declining, right? And then it started increasing from spring. Again here, new accumulation structure, volume on this was declining. You know, you can see. So this checks our accumulation. And after that, this up move was started. Okay, and then after this, you have your sign of strength, right? You can see your sign of strength, very high candle, very high volume. Boom, you can see it's one of the biggest wave volume so far. All right, and then so this is your sign of strength. So on the pullback, you can see volume was little bit diminishing, and this was your so we checked out this one. All right, we checked out this one. Now let's check the first one, which is, yeah, this we already did that. On the low volume, the low volume spring and low volume upthrust is a valid one. Okay, so here on the distribution you will see elevated volume. So as I come up upside, okay, we will see elevated volume when it's a distribution. So you can see here, okay, see the volume was overall very high. You can see around here on the distribution side, volume was increasing. So this actually proves the uh, elevated volume in distribution. Okay, now what does volume signature looks like in accumulation phase? We already discussed this. uh, you can see here, okay, supply being absorbed. All right, let's zoom in, look into it more deeper. Okay, so you can see, looks like here selling climax, volume is very high, then volume goes down like that, you see. Okay, and then when spring comes, right, spring low volume, and then volume just increases, sign of strength, all this stuff. All right, and then again on LPS coming back, volume decreases like that. Okay, so this is the volume signature of accumulation that you will see again and again in the market. Okay, um, so you can see that, like, how it's doing that. And to show that, to make your life easier, and basically observing the volume signature very simply, I have actually put this standard deviation bands. I will actually teach you guys a little bit later on what those are. But just remember that, like, this is your first standard deviation, this is your second, and this is your third, and this is your average volume. You know, uh, yeah. So when the volume is below that one, or average volume, or first standard deviation, you can see, this was your accumulation period, or basically market wasn't active. And then as soon as it breaks out of that, you know around there, and then followed up with higher and higher volume, you see, these are the events that follows. Right now here it says supply is being absorbed. All right, you can see. And now here the demand is being increased on the upside, and that's what we see market reflecting that. All right, let's continue. So now, as I showed you guys about the volume signature about accumulation, let's see the volume signature for distribution. How does it look like? Well, the volume is elevated in distribution phase because it shows the urgency to distribute for the institutional operator. They have a lot of shares to distribute, and that's why we see elevated volume. And let me actually show you how that looks like. Okay, so here you can see this is a distribution, and you can see volume is basically elevated. It's more than what we have seen in the accumulation. You can see it doesn't stay much longer below that, and it is like you see around there, right? Stays above one or two standard deviation, and that's why we call it the distribution volume signature. You will see volume was very high on buying climax around there. You see very high volume, right? Then volume just stays little bit like that. You see, right? And then little bit decreases around there, right? And then again, it stays there, and then when it starts distributing, you see this big volume spike. And it's like you can read it much faster with waves. You see, right? See here we saw very high volume, but market didn't went up, and then the downside volume was increasing, and that's what's showing you distribution. Okay, let's continue. So let's do some comparison about the accumulation and distribution and what are the characteristics that we have seen so far. So for accumulation, volume must be decreasing during range. We have seen that. All right. Second is this is going to be a gradual absorption. All right. Because meaning it will actually manifest itself step by step in phase C. Um, like that. Where is it? Here. You see. Um, and what's the purpose of accumulation is that like we need to eliminate the floating supply. Okay. uh, Spring should be on low volume, which is a valid spring, and then sign of strength will be in a high volume. You can see here. Okay, what's the characteristics of distribution? Well, first of all, volume is elevated during range. I've shown you guys. There's an urgent selling happening, and institutions are offloading their shares to the general public. All right, because just think of it like because institutions have a lot of things to sell. All right, that's why the volume actually stays very elevated in distribution phase. Okay, in sign of weakness, the volume is very high, uh, and we can see that around here, very high volume happening. All right, when we break out those low. Okay, so let's continue. So I have taught you guys indicator levels, which is basically these labels are this um, these volumes. This is just like from this point, or from this point, when the wave closes to this point, what are the total sum of all of this? So imagine we sum these two, this comes, right? Then we sum this and the next one, boom, this, like that. So that's what you're seeing here. Okay, this we call wave volume. Okay, and the number you're going to see on the top like that, this is just representing the number on that particular wave. Okay, so as I add that here, you go to trading truth wave and just enable this. Okay, you will see that in the chart. All right. So let me actually make it a bit bold. There we go. All right. So this actually shows the volume, wave volume on the swing points. Okay. So what we do is we compare successive highs, which is if decreasing V levels, that means shortening of thrust. We're gonna be learning about this in lecture 5.5. If compare a test, meaning spring V level should be lower than selling climax V level. All right. So if I find a spring around here, which we done that, okay, this over here, okay, what it's telling us is that like this and this volume, so this wave volume should be less than this, and that's what we can compare it very nicely. And this is one of the um, highest confidence that you can add in your trading. Okay, you can see volume was definitely decreased on this one, so this was your valid spring relatively. Okay, now at extremes we can actually compare the climactic action and see the climactic action. So for instance, here if you notice, very high volume. All right, very high up wave volume. I mean, it's not more than that, but like see this one, you see very high volume. Okay, so this way we can actually also figure out the selling climax or buying climax. So this is the module 5 roadmap, where in 5.2 we're going to be learning about effort versus result analysis, you know, uh, climax volume identification, absorption, high strength weakness and strength, hidden strength and weakness, shorting of thrust, volume at springs and upthrust, which I already shown you guys a little bit, and then volume spread analysis basics. We're going to do some replay practice and then review and some quizzes. Okay. So key takeaway from this lecture is that price can deceive you, and it will, but if you know how to read the volume, if you understand the how institutions leave their footprint in the form of volume, then you will have the ability to confirm the true intent of the price. Okay, because volume confirms the true intent of the institution trader. Okay. So basically the composite operator can manipulate the price, but every share bought and sold shows up in volume, and that's what we're going to be learning in this module, to read those footprints analytically. All right. So next up, we're going to be discussing more about effort versus result analysis. This is where I'm going to be teaching you guys the decision metrics that you're going to be applying to every bar. Okay. So I hope you guys like this lecture, and let me know if you have any question, and I'll see you guys in the next one. So thank you. Bye.